So now, without further ado, I want to move us to a much-awaited panel on the regional perspectives on financial inclusion, women's empowerment, and the climate transition. On the panel, we have a series of distinguished speakers that will be providing their insights from their regions. It's my pleasure to welcome Barbara Magnoni, who's president of EA Consultants, a development consulting firm. Mary Ellen Iskenderian, President and CEO of Women's World Banking. Shameran Abed, Executive Director of BRAC International. And Shiphra Chisha, Director of Programs at the Graça Machel Trust. We have no slides for this session today, and we really want it to feel like a digital fireside chat. Panelists, as you know, I'm going to be directing questions directly to each of you, but please feel free to not react or jump in when someone else is being asked a question or react to what others are saying. We really want this to be interactive. And to the community who's online, please really chime in, ask your questions in the chat. Colleagues from FinEquity are moderating that chat all along the next hour and feeding us questions from this virtual floor. And so really don't be shy and please do participate. So Shameran, Shiphra, Mary Ellen, Barbara, thanks so much for joining and agreeing to share some of your thoughts. Today, as you know, I'd like you to react to some of the climate hypotheses and assumptions which we crafted at FinEquity based on research that CGAP, Agrofin and Dalberg did in Kenya over the last year. These were synthesized and posted in a blog last week by my colleague, Katie Hyatt. And Katie also facilitated a very active D-Groups exchange on FinEquity's D-Groups dialogue platform over the past few weeks. It surfaced a lot of interesting comments and insights from donors, financial service providers, and others across the community. These hypotheses are just what they're called, hypotheses and assumptions. We know they're not exhaustive. We don't hold them to be true everywhere and all times. And we really want to ask you, what resonates with you from your experience in the region that you're anchored in? And, you know, comment together on what you think might hold true across different geographies and what might be really specific to a particular region. So to get us started, we often hear that women are affected disproportionately by climate change. Mrs. Machel yesterday said women are the first victims. And I'd like to ask the only man on our panel to start the discussion and ask you, Shameran, can it be true that women are more exposed than men to climate shocks? Can you share some of your thoughts on this and your experience from BRAC, both in Bangladesh and then obviously internationally with BRAC International?
Yeah, thanks very much, Ode. I hope you can all hear me.
Wow.
Great to see so many friends on here, especially a lot of CGAP friends. So hi to everyone. Yeah, thanks a lot for inviting me to speak. Happy to be the only man on this panel, and less of us the better. But so maybe I can start before even I get into a little bit of our experiences. Maybe start with a story, and the story is one that my father used to tell very often. And for many of you who might not know, my father, Fazli Abed, was the founder of BRAC, started BRAC in Bangladesh in 1972 post Bangladesh's independence, but also as importantly, after one of the worst natural disasters in recorded history, which was a cyclone called the Bhola cyclone that hit then East Pakistan in November 1970. And the story that my father used to say a lot was that when the cyclone hit, he was living a life of relative privilege down in the same area where the cyclone hit in southwestern Bangladesh. He used to live in Chittagong, used to work for Shell Oil. And very soon after the cyclone, him and a few friends of his started going out to some of these offshore islands to do relief work with the affected populations. And we don't know for sure how many people died because of that cyclone, but best estimations are anywhere between 300,000 and 500,000. And the story, the thing that my father used to do, the thing I wanted to share with all of you is that he said, for the first time he went out there and he realized that it wasn't actually the cyclone that killed everybody. It was poverty, right? Because he said, I was also in that area, but I wasn't affected by that cyclone. My friends weren't affected by that cyclone. It's the poor that were affected by that cyclone, right? And within that, the most deaths were women. I mean, children, of course, and elderly, but if you look at adult deaths between the ages of 15 and 49, the highest survival rates by far were men, right? And women died much more than that. And that was 1970. And the reason I tell that story is even if you look today, if you look at the floods in Bangladesh last year, if you look at the floods in Pakistan, if you look at cyclone deaths across Asia, right? It is always the women who are worse affected in every way. Mortality, income, you know, it's just, and it's not that natural disasters stalk women more than men. It is that their economic and social conditions make them much more vulnerable to shocks, to general changes in patterns and in livelihoods. And we're seeing this everywhere. So of course, in the work that we're doing in Bangladesh, we see this a lot. As you know, Bangladesh is one of the most climate vulnerable countries in the world, with some of the most numbers of people that are climate vulnerable. Over the next decade or so, there's going to be some significant issues that the country will have to face for large numbers of people. It's a country of almost 170 million in a very small area. So yeah, we are very vulnerable. And within that, of course, women are much more vulnerable. And the reasons for that are ones that are nothing that I would need to say much about, because we all know them. Relatively, lower access to resources or control over resources, lower mobility, less access to information, less access to technology. In every which way you look at this, women are way behind in terms of opportunities, access, resources. And these make women far more vulnerable and far more at risk of climatic shocks. And we're seeing this across all of the countries where we work in Asia and Africa. And actually, I know we're supposed to give a regional view, but my sense is this is fairly universal.
Thank you.
Let me stop here. Yeah.
Thank you so much, Shameran. And actually, you just mentioned Africa, and so I'd like to turn to Shiphra to comment from your perspective. It was really moving to hear Shameran's father's words. It's not the cyclone that killed people; it was poverty. Does that reflect with what you see in Africa, Shiphra? Can you tell us a bit more about your perspective from the region?
Thank you very much, Odd. And yes, I think as mentioned, and also as mentioned by Mrs. Machel yesterday, that women are really facing multiple crises, and they're vulnerable to climate change as well. It stems from the number of factors. We're looking at social factors, as mentioned, and we're looking at economic and cultural factors, and also in many developing countries, being South Africa being one, suffers from gender inequality in respect to human rights. We've got issues around economic status. We know in different aspects of Africa, women are struggling when it comes to assets and things like land ownership, housing, and also they've been faced by, as I've said, multiple crises, exposure to gender-based violence, which has increased during COVID-19. And I think as it was just recently mentioned, I'm repeating that access to education and relevant skills. And I keep saying relevant skills because the skills being provided and the skills that we've seen being provided during this time and during COVID-19, however, we always say relevant skills. And climate change has added to those challenges, and maybe it has aggravated women's vulnerability with those. We've seen during COVID-19 that Africa was really hit hard, and coming, as you say, that from the area where we stay, where we're coming from, that element of poverty, it did not therefore only widen the existing gap of that gender gap between men and women, but it really brought a lot of hurdles for our women, which included, as I've mentioned, the skills gap. Access to finance is one of the things that we're seeing with our women within the region, and also the control on assets that can be used maybe for the needed funding that they're looking at. So recently I looked at similarly, the climate change pose greater impact to people who already therefore are most vulnerable, because I always say African women sometimes are most vulnerable, and climate change is really posing more challenge. Recently, the United Nations Intergovernmental Panel on Climate Change mentioned that and said women represent the majority of the world's poor, are proportionally more dependent on the natural resources, especially in Africa. We know that agriculture are really the source of income. So what then is happening is then it makes them more vulnerable. And worldwide, women have less access than men to resources. What we see again is access to credit, which is due to the requirements that are needed, such as collateral, as stated yesterday by Mrs. Machel. And during COVID-19, they couldn't access agricultural input, and also decision-making structures such as they're not involved. Technology being one of those challenges, I think it has been mentioned. Hence, I think as yesterday it was mentioned that we looked at Afrishella, which is a gender lens investment fund that really aims to facilitate that funding to women. Women have limited access as well as control to a number of things, especially decision-making, and therefore are not involved in most of the distribution of environmental as well as management benefits. So to come back to your question, consequently, then what does that do? It makes women less able to confront climate change and making them really those victims of climate change, which we have seen across. And I think when we look at other aspects that they're looking at is access to insurance, which they're not sometimes in other different countries not able to access. I'll pause there, Odd, and allow other speakers to speak.
Thank you so much, Shiphra. And I just wanted to encourage everyone to start posing your questions, because we'll be reflecting those to the panel all along the session today. We're not just waiting for the end, so please start asking your questions. But with that, Shiphra, you just said women are not involved. And so I want to ask you, Mary Ellen, if you can reflect on your global experience with women's world banking, and then particularly on the work you're doing in East Asia. Can you tell us if gendered social norms play a role? Do they create additional challenges for women in the face of climate shock? Shiphra was just saying women are just not involved enough in the preparedness, etc. So please come in and comment, Mary Ellen.
Thank you so much, Ode. Yes, I think I'd love to build on both Shameran and Shiphra's comments, because I think it's safe to say that we're seeing everywhere, and I will speak specifically to Southeast Asia, but Women's World Banking is a global organization that does operate across the emerging markets. And we're seeing that existing inequalities are actually exacerbated through climate change and the ability to be resilient. And I couldn't agree more that women not being at the table, not being involved in coming up with both, post facto solutions after the climate emergency, but perhaps even being more engaged in advance on what mitigation strategies might look like, is definitely at play here. Similarly, I think we know that gender norms often play a large role in women's access to resources. They tend to either have less access to land, or as Mrs. Machel and Shiphra both alluded to, ability to own property, to claim property as one's own for either collateral or other purposes. Those gender norms that underlie that lack of property ownership have a very sort of magnified effect in the face of climate change. But I think the one other thing that I just wanted to talk to at a global level, and it just feels like, I don't know, I feel like for the last 20 years, if we had been playing a drinking game when I use the phrase gender disaggregated data, we'd all be drunk 24 hours of the day. It just feels like the lack of data, the lack of looking at who the victims are, who are the recipients of climate mitigation assistance, maybe a nice segue into Southeast Asia, where Women's World Banking is quite engaged in Indonesia, Cambodia, Philippines, and Vietnam. We know that those countries are some of the largest recipients of global climate resilience funding from around the world, but less than 1% of those projects, and we're talking millions and millions of climate relief aid every year, less than 1% of those projects have any gender tagging involved in it. So looking at how are women actually affected by very well-intentioned, very, very good mitigation strategies. But if you don't know how women are being affected, or if women are being affected, the value of those projects are just necessarily limited. And I think we're just seeing in Southeast Asia, so much of that is just exacerbated given women's disproportionate role in low-income women in particular, disproportionate role in very heavily climate affected industries, agriculture, fisheries, forestries, and interestingly in energy. And we're seeing even some of the larger scale renewable energy projects that have come about that are trying to bring women perhaps more into the renewable energy industry. Those often, I think there seems to be a little bit of magical thinking going on, that somehow just because it's a renewable energy project, it will necessarily take care of resource inequalities and will just automatically distribute the benefits of those projects. Whereas, unfortunately, quite the opposite is happening. We're seeing that women are often, even those limited land resources that they have, they're losing those land resources to these renewable energy projects. We're seeing them disproportionately displaced, even from mitigation projects. So let alone the impact of the climate change itself, but even some of the mitigation. So I think maybe just as a quick summary, women, I have enormous admiration for Mrs. Machel, but every time I hear about women being the victims and the first victims, it just makes me bristle a bit. It's of course true, and I think everything we've said in this panel so far has only proven that point, but women can also be the first ranks of the mitigators, of the solution to the long-term problem. But we have to be sensitive to their specific needs. We have to be collecting the data to see where they are and making sure that even the mitigation, even the solutions aren't in turn harming them more.
Thanks so much, Mary Ellen. This is really interesting remarks about being super deliberate in the design and delivery to achieve what were the goals that we're seeking to achieve. Barbara, can I ask you to reflect on your experience in Latin America, in particular when we prepared this together? You were talking about some real structural differences, including in the agricultural sector, etc., that might be very specific to Latin America. So I'd love you to come in and tell us a bit more about that.
Thank you, Aude, and thanks everyone. I think just before I do that, I would like to echo, just what we're hearing from the other regions. There's a data point that I thought was very interesting and in a bad way, that women and children are 14 times more likely to die in a climate disaster in Latin America and the Caribbean than men. Just to kind of, piggyback off of Shameran's story in Bangladesh, and it's not, the region is different and it has some important differences, but the gender inequities and the sort of social norms are very similar, and that's important to highlight. It is not a region that is unfocused on this issue. We have also a very, very high level of urbanization, and that is one of the very, very big differences, though. Latin America is, most countries in Latin America are between 70 and 90% urban, as compared to African countries that fall more in a sort of 20 to 50% region, South Asia, 30, 40%. And some of the countries in the Southern Cone, I looked this up and I thought it was fascinating, of Latin America are actually more urbanized than the United States. So we're talking about a visually and kind of structurally very different region with very similar problems, social norms, and gender inequities, right? And those are the sort of two things to keep in mind. I think this has an impact on rural areas, however, because those who are in rural areas are extremely poor, right? They're extremely marginalized because they are not normal. They are on the sort of tail end of society, and therefore very, very left out, and women within that even more so. So women comprise 43% of the workforce and own about 30% of the land, but they have very little decision-making power. And if you look at the value chains, the agricultural production value chains in Latin America, women tend to work for free in the home and tend to work in those aspects of those points in the value chain that are the least remunerative, right? So they're more involved in sort of early stage planting and maintenance of crops. They're not involved at the last like harvest sale piece the way that men are. So there's some great vulnerabilities there. But kind of going back to urban, which is what I wanted to highlight. This is an urban region, and it's a region, as many of you know, that has gone through significant structural change over the last decades, where there's a large level of informality. So that's why the microfinance sector has flourished as much as it has, because it serves that informal urban sector very well and very efficiently, including women. But as we start to think about financial products and services, and I know that's kind of the next step, and I don't want to kind of go in too far, but we need to keep that in mind, because a lot of times we've been thinking about parametric insurance as a solution or as a complementary solution to this kind of climate vulnerability in low-income populations and linked to microfinance. And as we think about that in urban areas, we really have to think about that product design. It has to look different in Latin America than it might in other parts of the world, because parametric insurance tends to be linked to a yield-based kind of agricultural calculation. And we're not really talking about people who are growing agricultural products in the region, but rather working and working in markets, going out onto the street, selling things on the street. So looking at some of these like more innovative parametric products that are more weather linked or rainfall linked is an interesting direction for this region in particular. I'll stop here because I know you want to get to financial services.
Thank you. And actually, I want to get to a question we already have from the floor, and it's from Sabanota, who's with CGAP. She's asking, what makes a woman more dependent on natural resources? As she says, she understands this from a livelihood lens, but when we look at women within a household, why would they be more dependent on natural resources than men? Does any one of you want to take that?
I mean, if I can just step in quickly on one point around that, water, right? Water is something that we use in our lives. We can't live without. It's used for cooking, it's used for cleaning, it's used for bathing and personal hygiene. And women tend to be responsible for both water access, maintenance, preparation of all those, water related activities. So, the minute that water becomes a problem, and it becomes a problem not only during drought, but also during extreme, rainfall situations and storms, and then water access becomes a real burden for women who are also more financially constrained. That's one area.
Does anyone else want to comment on this?
I think I'll also add, or just chime in here. I think one thing that just Barbara has mentioned is that financially constrained. So it's easy access for women, and in our rural parts, they've got access to land. They might not own the land, but they've got access to land, and therefore this becomes the closer and maybe the easy access to agri, and also focusing on that.
So we also have a question here from Antonique, who doesn't need to be introduced, from the CGAP, the gender lead at CGAP. And she's asking, what do you panelists see as the most promising pathway solution to advance women's empowerment in the face of climate change? And what is the role that financial services can play? If financial resources were not a limitation, what would you prioritize?
Well, perhaps that's a good segue into the financial services, conversation. I think we've seen globally, but certainly in Southeast Asia, that women are the very reliable savers in the household. That is part, goes back to some of the gender norms we've talked about, but it is very much a role, a financial division of labor, if you will, that is played by women. That said, while they tend to be more regular savers, they also tend to be saving less money. They are also very subject some gender norms, some household decision dynamics. The things that they tend to save for tend to be more household related, less about saving and investment that goes back into their own businesses if they have them. And the husband can be very engaged in influencing those moves. I'd say the thing that we're seeing on the ground is, with the very big exception of insurance, where I think there's just an enormous role for financial service providers to be introducing appropriate, easy to understand, easy to use insurance products. I think we're seeing savings products that are targeted to women, that potentially link to access to credit, things that are very, very old, things we've known for a long time, things that, the team at Portfolios of the Poor wasn't writing about, 20 years ago. Those are still really good solutions for the resilience and the climate change. I think it's a little bit of, do more of that, do it so that it is designed in a way that it's appropriate to reach women. I know, Ode, I won't say much more in answer to this, but you wanted to talk a little bit about informality and informal.
No, please go ahead. Yeah. Do you think that the fact that women use informal services more than men hampers their access to these types of services? And are informal services, do they make women more vulnerable than men?
I mean, it's such a naughty thing to talk about, because we know that even when women make a move to a formal financial service, they'll very often stay engaged in that informal service. They see it not only for things like social capital, which I would argue probably is one of the greatest source of women's resilience, is that social capital, but they also report that the discipline that they have to maintain in order to stay in the savings group can often be something that they don't find with the formal system. That said, we also know that an informal system that perhaps is digitally tied, we've seen, I know Christian is in the chat, we've seen some great data from the VSLA program that CARE has done, where VSLAs that are tied digitally to formal financial systems can see the exact same groups, the exact same women saving up to 40% more because they have that digital linkage. So I think to say an either or when it comes to women and informal services isn't really the right approach. It's got to be a both and. The one thing that I think is quite interesting in Indonesia, because again, you'd asked me to speak specifically on Southeast Asia, is that the government has now required the financial institutions to embed or provide a financial and digital literacy component to any product that is targeted to this this market segment. And I think that's just so fundamental. I think that really is the next big, it's always been the big challenge, and it's going to continue to be the big challenge of those of us working in this field, that the thing that's going to keep women in the system and really expanding their engagement with formal financial systems is going to be their comfort, their knowledge, their confidence in navigating particularly digital systems to use those financial services. Antonique, it's all your fault. I've been answering your question now for half an hour, so I'll stop talking.
Can I add just something specific to climate, though? Because we did a lot of work some years ago with the Milk Project on looking at how low-income households responded to different shocks, including covariate shocks such as climate. And the response is very different with covariate shocks. Typically, when something bad happens to a family, they turn to the closest and most easily accessible way to finance that event, right? So that would typically be your neighbors, your friends, your family, somebody nearby who would either help you out with some free money or a loan or something like that. They will be less likely, and it will be harder to go to a formal sector response, but that usually is combined, right? Because one strategy is not usually effective. You need multiple strategies in order to kind of pull together enough of a pool of funds to manage your event. When there is a climate event, everything changes, because your friends, your neighbors, all the people that are easy to access that would typically be in your informal circle are going through the exact same problem. You can't access them. And so the only thing you can do other than get support from the government is go to a formal financial institution. But what happens to the formal financial institution? The formal financial institution, if it is a credit provider, has just lent this entire community money, right? And suddenly has to write off a whole bunch of loans because they don't have, they're not getting paid back. So they're not going to give you money either because they are, pulling back on risk. So what I think is very interesting, and I started to work on a project with an investment manager called EQ that has a product called CRED, which is very, very interesting around this, is providing emergency liquidity to the formal financial service provider in the case of climate events, so that that liquidity can help buffer some of this impact on the MFI and keep liquidity in the community. Short of that, it's just government.
Thanks so much, Barbara. Shameran, can I ask you just to reflect on some of that, how financial services can help women mitigate shocks, but also if they can help them adapt more climate resilient practices. For example, I know that BRAC is doing a lot to try and help women adopt climate smart agricultural techniques in Bangladesh. So if you could tell us a bit more about that.
Yes, thanks a lot. Yeah, I'll try to answer both the questions and Tonique's one and the formal informal. I'll try to do a job of trying to answering as much of that as I can. So first of all, if you think about our sort of theory of change, right? As an organization where we say we believe in holistic development and integrated development, we believe that you've got to address both the economic and the social needs of people, especially poor people, and especially in our case, poor women, right? So that's something we've worked on for 50 years. And within that, financial services for us is absolutely critical, right? So we are not a microfinance organization, although we do microfinance in a big way. But microfinance, broader financial inclusion is a very, very critical element of our entire development sort of work that we do. So that's first. But and so in everything that we do in our work with climate adaptation, let's say, and I think I think some of you are saying mitigation more broadly, right? Including mitigation and adaptation, because just wanted to highlight also that poor people, especially poor women, are not the ones who are majorly contributing to the climate issue. So the mitigation burden should fall with those who are the bigger contributors. And we need a lot more resources in climate adaptation, because the poor are, again, and the poor women are the most affected. And I agree, Mary Ellen also should be leading the solution as well. Completely agree with that. So talking about climate adaptation, I'll just say two things. First, I think there is a big role for financial services in terms of building financial opportunity, especially new types of financial opportunities and livelihoods. Again, you know, even if I just stick to Bangladesh for now, if we're looking at what changing climate patterns and changing weather and, you know, upward salinity is doing, a lot of traditional livelihoods are just going away, right? And we need to, you know, we need to support people to build new livelihoods, new economic opportunities. And how do you do that without financial inclusion, without giving them access to savings, credit, you know, insurance, pensions? You know, how do we do it without that? So that need is absolutely essential. I'll just echo what Mary Ellen said. These are things we've known for a long time. This is nothing new. But also in building resilience. So both in terms of financial sort of opportunity, but also building resilience, that the role of savings mobilization, the role of insurance, you know, even credit to an extent, it is massive. And so for us, you know, it is work through our agriculture food security program. You know, there's a lot of work in behavior change, getting training and capacity building and skills, new skills development, more access to jobs, of course, for women and families that were more agrarian in certain parts of the country, because those opportunities are going away, unfortunately. But at the center of all that has got to be financial inclusion and financial services. And very quickly, I fully agree again with Mary Ellen. It is not an either or. Yeah, I mean, you're going first. You took all of my points, Mary Ellen. But yeah, I fully agree. It's
the oldest trick in the book, Shameran.
Yeah, look, formal. You know, we can say formal is better than informal, but only if you are building the right products for the right groups of people. And again, as we've said, women have to be part of even, you know, the developing of those products. At this point, I think there's still a lot to do there, right? There are a lot of financial service providers who are reaching poor women now, but are they reaching them with the right products, especially when it comes to climate adaptation? I don't think we have enough evidence to suggest that we are. So yeah, we can say we wish it was more formal, but formal just because we're formal, or because certain providers fall within that category, doesn't necessarily mean they're doing more. And we need to be more intentional and solve this problem faster, I think.
And thank you so much, Shameran. And we have a question from DID Canada in French, which we've translated here, but asking essentially, you know, what is the role? And I'd like to ask you, Shiphra, and then have others comment. But what is the role of digital financial services in particular, and what are both the opportunities and the challenges with digital financial services in the context of climate?
Thank you very much. And I always say when we talk about financial inclusion that when I talk to the financial services sector, that women are the next emerging markets, and you need to look at that. So digital financial inclusion, as it has been mentioned, can really help leverage finance for climate change and also others. And I think Shameran has mentioned adaptation and mitigation. So this, what we're looking at, what we've seen during COVID-19 with the regulatory process and the measures, and also the waivers and digital payments, has really taken us to where we are now, to say, how can we use the same process to be able to do that? And I think from us, from the Graça Machel Trust, we look at this at a policy level. That policy must be essential and must enable or foster this development of this digital inclusion. There's a need, though, for the use. I think a lot of people have mentioned there's a need to use a gendered lens when designing these financial policies and financial products that are used by women. and that impact women during crisis. And that for us is quite key and critical. And I'll tell you the reason why we say that. We've seen platforms such as, for example, Ecoba, which is a fintech company that digitizes community savings group by giving them digital financial footprint and access to finance and wealth creation. Key things that are quite important, I think, when you're going back to the question that you were asking, whether informal or formal, and we're saying that informal, as I've gone through the continent and I've met women, and I always like to ask them, what is your system called of village banking, as they call it? And in Cameroon, they were saying to me, we'll call it junkies. In Kenya, I think it's something else, Ficobas. In South Africa, it's called Stokvel and other things. And in Zambia, they call it village banking. And during COVID-19, we saw the Zambian women, our women, coming together and building, businesses through that village banking. And in Cameroon, a group of about 4,000 was saying to me that we've got $400,000 now currently, and one of our women has built a bank, one of our women has done this. But the risk and also the challenges that they face is that when they do this type of village banking, there's no credit history. And therefore, what you find is that they do not have then access to more credit when they want to do other things. In South Africa, for example, during COVID-19, somebody was mentioning that this can be done through the formal process, and the emergency funds were done through formal processes. But what we found is that women could not access these, one, lack of information to the right beneficiaries. The second one was that they did not qualify because of the credit history, and also because of the credit record that they had to be able to access these funds. And we found only 30% of the funding then was accessed, and some of the funding could not be accessed. So this digital platforms, and as I've said, could be and linked to what we are doing. I think it was mentioned again that women do not understand some of this. And I always say when I talk to the financial services sector that get women to understand. But I think from the Graça Machel Trust, which is very important for us, is we're building a pipeline of women within the financial services sector, because our view is that when you have people who understand the products that women need, they will be able to develop these products and they will be able to do that. In Zambia, for example, we're asking a number of women, why do they not access the formal sector? And why do they not access the digital platforms that are there? And they say it's because of lack of information. We don't understand that. And some of them would not use them, even if they have access to that. They go back and they use what they have. But as I said, that this is, for us, we think this is important. And for us, we think that policy needs to accommodate this, and this is where we are going. And from the Graça Machel Trust, we've built the project that we're looking at currently, that is looking at how we can be able to strengthen three things that we're looking at: how women can collaborate with the sector-based network to build a political will on investments, and through COVID-19, it looks at how do we provide an advocacy around or advocate the gender inclusion and financial inclusion. How do we build that critical mass of women leaders within the financial services sector that would be able to understand what we're looking for and what women are looking for with regards to financial inclusion? And also, how do we enhance the participation of women in financial regulatory policy making through strengthening women's networks and also them providing that? And lastly, recently we had the South African government, for example, has, through an institution called the Financial Services Sector Facet, has provided funding for 1,000 women over the next 3 years to be able to go through a leadership program that really would help them to understand and get to the next level of leadership. Because we always say we work with an organization, the Institute of IWF-SA, which is the Institute of Women's Forum South Africa, and a global organization. This is really for us to make sure that we build that pipeline of leaders within the financial services sector. It's key, because that's where it starts. And then that pipeline of women leaders within the financial services sector is going to be able to understand, we hope, what women need, and be able to build these platforms and to be able to build what we are looking for. And over the next 3 years, we're hoping that that is what's going to happen. So from the key area where we're saying that let's start there and let's make sure that there's understanding. I won't talk broadly about other things such as insurance and other needs. And lastly, I just want to say that when we said that what is the one thing that you would do if money was not an issue, for me is that I would provide skills for women to understand these. And secondly, what I would do is, or two things. Secondly, I'd make sure that there's access to markets, because it's one thing we've talked about access to finance, But it's one thing for them to be able to understand, it's one thing for them to have their produce and products, but lack of access to markets and understanding those markets limit limit what they are doing. So I'll pause there once again, Odd.
Thank you so much, Shiphra. And I think you reflected on this idea of the importance of diversity in staff and in leadership of financial institutions, which is something that we've done quite some bits of work on together as a community. And I'm sure my colleagues will be posting the links to some of the resources that we've put together on this topic. I've combined two questions from Ratimani from CARE and then from Adele Were, and some others posted questions in the same vein, and I'd like to ask it to all of you. But basically, they're asking, what can we do in terms of product design? FSPs are having a hard time designing these products. And then there's a question more about, are we not overburdening FSPs when we're asking them to do so much? I see, Mary Ellen, you're shaking your head at the risk of letting you go speak before Shameran and stealing his talking points. Please jump in if you want to talk about this.
Well, Shameran, I'd love for you to go first here, but I'm sorry, I'm very hard pressed to think of FSPs as being overburdened when we have an incredibly valuable market just sitting there, really, really needing and wanting their services. But please, Shameran.
Well, exactly. I mean, why are we worried about overburdening FSPs? I mean, I mean, be much more worried about serving the people, communities that really need this. I really don't think it's about us. Yeah, I fully agree. I mean, on the first question, I'm sorry, I don't think I have a very good answer to that. I mean, how do we do better product design? I think to go back to themes we've heard earlier today as well, it's got to include the people affected and the people and we need to work with communities to see how we provide better products that serve needs. And again, I'd like to say these have to be products that cover the entire range from savings to credit to insurance to pensions. We've got to provide greater flexibility. We've got to provide easier access, especially for women in rural, hard to reach areas across many parts of the world where we work in. I mean, we are doing some of that. I think it's early days still, and I think we need to generate a lot more evidence of what's working and what's not working. But we are trying to do it, and many others as well. And we need to keep pushing on that, I think, and not worry about whether we are overly burdened, because poor women are overly burdened. Let's put it that way. And we need to try to make their lives easier, and that's a worthwhile enterprise.
Thanks,
Can I jump in on that? Because I think that's right. We don't have an evidence base yet. We're still working on that, and that's a critical piece. And as a result, I think, not to defend FSPs, but FSPs don't enjoy trying things and spending their resources trying things and then failing, or piloting things over and over and over again, especially when there are opportunity costs to that, and they're not always. Sometimes there aren't opportunity costs to that. So even if it's like a free resource, it can be burdensome on the institution. And I think this is a space, because it is such like a public issue, to involve government and collaborate with government when you are testing and developing new ideas and new products, right? So I'll kind of talk about a couple of things that I've seen that have been interesting in this way. The first is premium subsidy for insurance. Parametric insurance in particular is still not well priced. It's still not very effective. There's a huge basis risk. We're still figuring it out, right? We're still working out kind of all the kinks. And if you go out to a community and you charge the money for this insurance and it doesn't work, that can be quite disappointing and might actually push you out of that market forevermore because they won't trust you ever again. So that's a really good space to involve premium subsidy, even, either from governments or multilaterals or, whoever's in. But I've seen that happening in certain places, and it's kind of a nice way to build trust and also to tweak products as you go and get them to be better so that maybe one day you can start charging a little bit for them. So I think in that sense, governments matter and can matter. They can also be a very effective distribution channel. Not that FSPs aren't. I think like boots on the ground are critical in all of these situations because of the sort of nature of climate issues. Getting to people becomes much harder, but getting to people is always hard. So government extension services and other platforms that have boots on the ground can be really effective and helpful in partnering in these early stages, especially when you're just trying to figure out what works and how to link these things and embed them into a client's existing life. So last year we supported this project in Mexico that was a public-private partnership with the IDF consortium, which is a consortium of insurers and reinsurers. And a lot of the work that we were doing was to try to ensure that enrollment was just as high for women as it was for men. And what we found was that to do that, we really needed to back off some of the focus on digital. Not that like the enrollment wasn't digital, but there was a physical aspect to it. There were humans talking to people, engaging people, and even going to their homes if they weren't able to attend meetings and other kinds of activities, and that's extremely costly. So another place where government might play a role, government programs, embedding it or linking it into existing extension work can make sense because FSPs aren't going to want to do all that work. I think that's very useful. And then kind of lastly, where I think governments make a huge impact, and we saw this recently with COVID, is in regulation, right? So when there is a covariate problem, to what extent are regulators able to loosen requirements a little bit so that you're not writing off all these loans and damaging your portfolio so quickly, right? So there are places where government can kind of join hands and help make these experiments and these processes a little easier.
Thanks. And actually, there's a really interesting follow-on to Antonique's question from Suma Swaminathan in the chat, who's asking, you just told us about like the non-private sector players and the role they have to play, but that she's asking about the role of non-credit and non-financial products that might accompany some of these financial products. Does anyone want to talk about that?
Or just to understand the question, are you saying just repeat that, please?
We can't hear you well, Shiphra.
No, I was saying, can you please just repeat that? Is he saying non-financial?
There was a question about what are the non-financial needed, financial services needed to help women and access financial services in the case of climate shock. What are the build-around services that are needed?
For me, I'd say technical expertise, technical skills would be required. Sometimes you need to get them to a certain point where they can be funded. So they can play a big role there to get the women to that point.
Thanks.
Yeah, and I think as a combination also, and Shiphra, I think you mentioned this extension and access to markets, also very important. Value chains extension, access to markets also extremely important, in addition to training, capacity building, all of that. Yeah.
Thank you. And actually, Barbara, that's a good segue into the question I wanted to ask you next, which was what could be the role of digital marketplaces to help women that are faced with climate shocks and help them access new, less vulnerable types of livelihoods? What's the experience in LAC?
Yeah, so digital is tricky during a climate shock, right? Because you might not have connectivity, you might have some other barriers that might be tricky, but where it can be very helpful is if you don't have to physically go collect funds, because transportation and mobility are also challenged So if there's a sort of digital payments component into a savings account or some sort of account, in an insurance or, government transfer or whatever else, that can really help kind of deal with that shock. We also very informally, I mean, I can't give away a lot about this study, but we did do some work on the IDF Mexico study and found that there were some behavioral advantages also to making those payments digitally that might keep the money, focus the money on what it needs to be focused on a little bit more, or what the intended need was when you get an insurance payout. So there may be some benefits there. But I just want to kind of de-emphasize digital a little bit, because we all know why digital is great or whatever, but digital is a very, in Latin America, women's digital adoption is much lower than men's. And so if we go 100% with a digital strategy, we are by nature excluding women unless there's a very purposeful and intentional effort to include women. And that typically will involve a phygital solution, which means, a human being either on the phone or in person interacting on some level, either directly or indirectly, to answer questions, to provide, some sort of contact, if you want to increase the relative proportion of women adopting digital financial services. So, digital has its advantages. I'm on board with some of them, but I also want to kind of tone down the panacea of digital, because it is not necessarily going to get you to that equity that you're looking for.
Thank you so much, Barbara. We still have time for a few questions. I see one from Ratimani from CARE about how we can entice FSPs to provide loans that work to move women into the green business sectors. Does anyone have experience with that or want to talk to that? I think, Mary Ellen, you talked about, it's not just because it's green and, and that we're offering it to women, that we're actually doing the right thing. I don't know if you want to comment or anyone else.
I mean, I don't have any particular experience. Women's World Banking doesn't have any particular experience in sort of driving financial service providers to lend to women to go into these sectors. I mean, it's a hard enough job right now trying to get financial service providers to recognize this customer segment as the valuable source of revenue that it is. But I think maybe the question will require sort of education on both ends, both at the FSP level, but also, making those opportunities, making women aware of those opportunities, making them, as Shiphra's pointed out a number of times, the importance of capacity building, of training. I think I very much endorse Barbara's, proceed with caution on digital and the need for that human and tech touch. One thing, just as a quick anecdote, that we're seeing in just kind of unbelievable proportions in some of the work that we're doing in rural India, the impact of women business correspondents, women agents are having, both frankly with men and women, both in product adoption. So we're seeing rates of more people signing up for a product, moving from sign up to actual savings deposit with that product, maintaining higher savings balances of that if it's a savings product. If a woman agent is the one who sold you the product and who is continuing to engage with you, and then a higher rate of cross-sell to an insurance product. So we're just, and the thing that's just been so fascinating listening to both men and women is the men have said that they find it much easier to ask kind of a stupid question, if you will, to a woman agent than they would to a man. And so we're just seeing a really kind of extraordinary business results by having this very large sales force of women agents. So to the extent that we're trying to raise awareness about new types of businesses, new approaches, new business models, you know, we might think about building that into the you know, the human outreach, and make sure that there are a lot of women doing it.
Thanks so much.
Sorry.
Please, Barbara, I didn't want to cut you out.
No, that's okay. I think that at least in Latin America, there's a real kind of socioeconomic disparity between the sort of startup community and the micro, you know, enterprise / small farmer community. And I think we have to be really clear what we're talking about when we're talking about these opportunities to get into green products, because, you know, wealthier women, more educated women from a different, you know, urban middle class might be an amazing target for those kinds of products. And they're more prepared, they're more educated, they have access to capital and resources, or could with some support. When you're thinking about poor women, they're just trying to keep up, right? And keep up with their male counterparts, or keep up with the market. And so, you know, the sort of cost of capital and the return on capital over a short period of time is going to be a much more important factor in their thinking about what they invest in and how they kind of switch over. So, you know, I think a lot of times that kind of falls back on, you know, putting pressure on the poorest, most vulnerable people to, you know, fix climate change, when really what we want to do is support them to adapt to climate change and mitigate the effect on their livelihoods. But we want to push big companies, I hope, multinational companies all over the world, in the North in particular, to really make those changes.
Thanks so much, everyone. Time is up, but really, I thought this was a super engaged panel, and the chat has just been on fire with a lot of comments, in particular on this question of, like, why worry about overburdening FSPs? There were a lot of reactions, and it was really great to hear from all of you, you know, that, you know, there's a big business out there, and what matters, as Shameran said, is the women who are waiting for these services they need. So this was a great reminder. I want to tell everyone that the conversation is not finished. Please continue providing your questions, your comments, your suggestions on the blog that we have up right now on FinEquity's webpage. And with that, I want to thank you deeply, Barbara, Shameran, Shiphra, Mary Ellen, for joining us now.